Well, if you would have said on Monday the 5th, when the market had its worst day of the year, the S&P's first down 2% day in more than 300 trading days, that we would follow that up with the best week of the year for the S&P 500, I would have called you crazy. A lot of people in this chat would have called you crazy, but you would have been correct. Last year was officially the best week for the overall market in the year. We've got a lot going on this week. Jackson Hole starting later in the week. A lot of economic data to look forward to. So we'll see if we can continue that positive momentum. Not a lot in terms of earnings yet, but we do have some bigger companies reporting this week we'll talk about. We, of course, have Estee Lauder, some news with AMD. And here we go again. Mpox, cases on the rise. Is it time to look at some vaccine stocks? We'll take a look at some of those today. Without further ado, it's Monday morning. Let's go ahead and get pre-market prep started. Welcome to Benzinga's pre-market prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, let's bring my man Joel Elconin on the stream to talk some indices, see what the overall market is doing. Joel, how are we doing this morning?
I'm doing well, we're up just a few ticks here at 55.80. Had a higher open, but you know what? We faded a little bit, and what do you know? The yen catches a bid here once again, so we'll still be paying attention to that. The buck is down 24 cents, making a new low for the month. TLT up 45 cents, waiting for Friday and Jackson Hole, see what Powell has to say. Crude right in the middle of that $70 to $80 range, down 57 cents at 74.95. Gold down $5, 25.32 after making a new all-time high. Silver going the opposite way, up 21 cents, over $29. I should sell some silver, 29.06. And Bitcoin having a rough session, minor league rough, down almost $1,400 at 58,600. Let's bring in Triple D and Triple D. Aaron and Triple D, I did something this weekend that
You won gold in another swimming competition.
No, but it's sports related.
Belly flop competition.
I don't have much of a belly. Sports related, and I don't know. I'm trying to think if it's the first time I've went to this sporting event since
you went to the
COVID.
Car race in Brooklyn, Michigan yesterday.
Have you ever been up there, MIS?
No.
That's a cool place. No, but you're warm. It was in Michigan.
You went to a horse track.
No, there's none left.
You went to a Tigers game.
Yeah, I did. You beat
Tigers.
Which one? The game on
Saturday.
That's what the Tigers beat the Yankees. What was it?
3-0. Yeah.
How do they look? Like I've been boycotting them for the last couple of years because they suck. How do they look right now? Like you're sitting there analyzing. Are they coming around? They got some young guys.
They look okay. I mean,
they took the series for the Yankees. They won last night. They played, Dennis. You might think this is cool. They played in like the Little League World Series. So they played 2 games here in Detroit and then went and traveled to, what was it, in Cooperstown or I don't know. Williamsport. And so they played last night in like a special, Sunday night baseball stadium and came back and won. They went down 2-1 in the top of the 10th, came back in the bottom of the 10th and won 3-2. So the Tigers take 2 out of 3 from the Yankees there. Not a great year for the Tigers, but hey, I mean, beating the Yankees, it's not too bad.
Yeah, they got some. They're bringing up the young talent. They didn't trade Scooble at the deadline. A lot of people are. I mean, they're up and coming. They're far from being the Yankees. I mean, there's so many teams in 73 and 52. It's unbelievable. But I just have to say, and maybe I'm just a spoiled sports fan. Man, baseball games are they're slow. Even with the pitch clock.
Really slow.
I know. They're doing what they can. It was fun. It was fun. The ballpark was hopping. Actually, last thing, then we'll move on. I have some cousins that one cousin worked in California, and they were driving his car back, and they hit the ballparks on the way. So when they got to our area, they did a Minnesota Twins game. They did a White Sox game. They went up to Milwaukee for a game. Then they went to a Cubs game. Then they drove to our house. We went to a Yankees game. And then after the Yankees game, they left and drove to Pittsburgh to go to a Pittsburgh game. And then they're going to a Mets game.
Holy.
Wow.
Yeah,
I've heard
Commitment.
I've actually heard that the stadium in Pittsburgh is pretty cool. I want to go check
I
out
heard
that
that
one.
too.
So if anyone in the chat's been there to PNC,
We
let me
better
know.
start talking stocks.
We should. We
because
will.
the
Joel, I
chat
was
is
just
going to start losing their
Joel,
crap.
I was just gonna say
we
you
got a
should've-
baseball conversation going here. It's not even like a preview of the NFL season. It's like August baseball.
we could do that
It's,
too.
it's pretty dry.
The
This
Lions.
is when pretty. We'll do the NFL preview show coming up, but that is not going to be
The
today.
last thing I was gonna
Everyone
say.
in the chat is going to leave.
The last thing I was gonna say is, Joel, you should have texted me. I was right next door to the stadium at the tin roof watching the game over there because I was gonna go into the game on Saturday, but I waited too long and the scalpers were still asking for like
Yeah,
40
it was a nice crowd.
$40 a ticket. All right, let's get to some stocks. So we're kind of light on headlines this morning. That doesn't mean we don't have any headlines to talk about. I guess let's start with what had been the talk of the town a couple weeks ago, and that, of course, is the Japanese yen. The Japanese yen strengthened overnight. It did hit its weakest level against the dollar since March and kind of came up a little bit, which could be, I mean, we've had this inverse correlation with the Japanese yen and U.S. stocks the past couple weeks, obviously. So if the yen continues to be strong into the open, is that going to be bad news for stocks today?
It's possible. It seems like the market's not worried about it here anymore because this is actually a serious move up here, 1% here now. Let's look at the S&P overnight action and just compare and see, what the S&P is. Because I know we were up a little bit farther overnight. We have weakened a little bit here from those highs. So, you could say maybe it was the yen, strength here that's causing markets to weaken. But I mean, we had Friday, the yen strengthened a little bit too, and the markets opened lower, and then they just rallied them up anyways here. So it feels like the market doesn't care about it right now. It may start caring about it, though, so just keep it on your back burner. It's a risk because if the carry trade is not fully off, that's obviously some people getting hit on the other side of it, which means they may have to, liquidate some other positions if they're going to, take heat on the other side of that trade. So it's a risk, but I don't think it's getting any headlines here this morning.
No, it's not. It does. Just going back, I mean, Friday, did those selling balances carry through to the open?
Holy cow, Joel. You're trying to take me to Friday. All right, Friday morning. It was a long time ago. So I do remember some sell imbalances, and I do remember the market opening. Did it open weaker?
Yeah, it did. It did. It never took out the pre-market low, though.
Yeah, I think they did carry through. There was some weak openings. I don't think I got much on the open.
Oh, really?
It wasn't like you filled on a billion
Ding,
stocks.
ding, 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 ding,
No,
ding,
I know.
ding.
And sometimes you get that, and it's always that 10 seconds of like, I got a lot of fills, and then you start seeing the green, and then you're like, oh, it's okay. It wasn't one of those days. It wasn't one of those days. I've had some because I will make markets, based on fair value, especially on an options expiration day. And sometimes you can get filled on a lot of stocks. Like I've been filled on over 100 stocks in about 10 seconds before. It was not one of those days. Those days happen like once every couple of years. It wasn't one of those days. I don't think I think I may have one or two opening fills. But it's hard for me to remember Friday morning action.
Okay. All right.
Long time ago. Long time ago. There's a song about that. Okay. So today, though, we have multiple headlines. Obviously, AMD is probably one of your biggest tech movers here today, but we have a couple earning stocks, and then we have a lot of earning stocks to preview this week. We also have a little Monkeypox stock popping up as well, which we can talk about too. So we'll leave it to AB. Where does AB want to start?
Let's start. You mentioned the earnings. Let's start there before we get to AMD's acquisition. We'll start with Estee Lauder. Of course, we spent a little bit of time talking in the cosmetic space last week. We were talking e.l.f. versus Ulta. We never even mentioned Estee Lauder. And this is why, is because Estee Lauder has kind of become the ugly stepchild of the group. Estee Lauder reported EPS of 64 cents, which beat by 39 cents. Revenue of $3.87 billion, beat by $70 million there. But they issued a warning on weak demand, specifically in China. So the outlook was disappointing. Despite that double beat, the stock traded off on this earnings report. It actually got all the way down to, I'm seeing around $87.
87. I saw it 85.70.
Oh, these
Greg.
algos, they just get, they get all overshooting everything. So excited. So excited. Then it's bouncing back. Those algo overshoots are almost, it seems like, 90% of the time in both directions. The algo overshoots in the first bar. So don't panic in the first bar, and don't, FOMO in the first bar either, because they seem to always retrace a little bit. Joel?
I wasn't sure if he was done with the report, because you see they took it up on the headline number, the beat. Oh no, and then the guidance. Oh no, so you got over 97. You don't see that. You made a new low of the move at 85.70. That's your lowest level since May of 2017. I will just look at this and I will say, you know what? You're darn close to the bottom of yesterday's range. So you've got a gap fill at 91.78. Sellers seem to be congregating there. And then next number, a pair of highs or a pair of closes at 95. So there you go. I don't think we're going to see that pre-market low. You have to find another number. If you want to buy that, 86.05. Oh, that was close.
And one thing to consider is, the coincide is nice that it coincides with those lows, but we've had a little bit of the laggard trade since Activist Central last week. We've had the laggards perking up. The Nikes perked up, the Lululemons perked up. It's not the time to come in and be shorting laggards. It's not the time right now. Not that Estee Lauder is going to get activism, but right now the laggard trade has picked up a little bit. So just be aware of that overall theme, that it's not the time to beat up on the stuff that's been beaten up. That stuff actually has turned in even a little bit. Even Intel showing a little bit of life, which is the worst stock ever. So I think we're at the point where it's hard to beat up the laggards anymore at this point in time. It might change, but right now I'm cautious shorting stocks that have been really beat up. So the other earnings stock, and we might as well cover them both, and then they all want to talk Tesla because I did something in Tesla on Friday. We'll come back, and I totally forgot, so I will talk Tesla here in a second. Is Zim, Z-I-M. Let's talk. It's actually Z-I-M in Canada, but we're in the US, so we'll call it ZIM. AB
so this was a stock that went crazy during COVID. A shipping stock with a big dividend that I think people have been interested in for a couple years now. So Zim Integrated Shipping reported EPS of $3.08, beat by $1.16. So pretty significant beat on EPS there. Revenue of $1.93 billion, beat by $150 million. Raises outlook, declares a 93-cent per share dividend, 11% volume growth, doubled Pacific revenue. So all in all, great report for Zim. Stock trading higher by about 16% this morning.
Big pop. This stock is often very wild. It's just, and obviously it's come back a long ways from those lows as well. This was the value trap of all value traps a while ago, where people were citing a 90% dividend, and then obviously they cut the dividend to next to nothing. So it's only got a 1% yield. Now, whenever you see stocks with 30, 40, 50% dividends,
be careful.
They're probably going to be cutting those dividends. Stocks just don't trade with 30% dividends in the long run. They trade with it for 1 quarter, and then they cut the dividend and it goes to nothing. So I remember that about this stock. This was a value trap big time. With that being said, the stock is showing some life. Stock's, popping up here. So we'll throw it to our technical analyst, Joel Elconin, to tell us where it's going.
I would just say, if you want to hold out for more, there's a triple top in the monthlies at 23.65. That's and hasn't hit that level 3 months in a row. It hit that, not August, but the prior 3 months. And if you go back to earlier in 2023, same area. So 5-star area, absolutely no idea where to buy this thing, but have that eye on the potential resistance.
Okay, I'll give my Tesla. I'm going to give my little Tesla rant here now. I'm just going to stick it in between before we start going and doing earnings previews here. I sold some Tesla on Friday. And people are going to say, oh my gosh, Dennis, this is in your long-term portfolio. So I'm supposed to touch this. Yes, but I still have a core position in my long-term portfolio. I sold about 30% of the position, so I'm still holding a good chunk of it. But I'll tell you my reasoning. I did a lot of research. Thursday night about full self-drive. And I watched a lot of videos. I called some friends, talked to some people. One good friend of mine, Peter, I won't give his last name, but anyways, he knows, he's right and tucked in with, he's really in touch with a lot of technology stuff. And he's obviously, I didn't even know he had full self-drive, but I knew he had a Tesla. I'm like, for sure he's got full self-drive. So I gave him a call and I'm like, how's the FSD? He's like, it's cool, but he's like, Denny, it's a long ways off from being able to drive itself. And then you're watching videos and you're figuring it out and you're like, can he even remotely come close to hitting this October robotaxi event? Like, I think he may actually have the event in October, but he's not going to talk about, yeah, we're rolling them out next week. It's going to be like previewing something to roll out maybe, you know, a year from now. And this market is so bloody impatient that I just think being full size and oversized Tesla position at this time, what's the immediate catalyst here that's going to drive it higher? Humanoids are a few years away. Full self-drive, when I was talking to my friend, is like at least a year away, if not 2 years away. And I'm like, I'm just get worried that this market's going to be disappointed on this robotaxi event. And then you look at the stock action and you think, this has been a damn good run. I mean, we just hit 180 9 days ago. It's up to I sold at 219 actually. I got near the high on Friday. That's like a 20% move in, is that a 20% move? I think it is. Yeah, about a 20% move from the lows in 9 days. There's so many stocks up like 20%. Like my Micron, I was looking up 23% in 9 days. It's been a big move for a lot of stocks. So not that I don't think I'm going to be wrong in the long run here, but I think my timing is off. After doing more research, spending hours, I mean multiple hours, you know, going through videos of people with FSD, talking to my friend for an hour, talking to that, I think there's very little chance that robotaxi is coming in the next year. I think it's at least a year away, and it might be 2 years away. Some people in the chat are saying 10 years away. I don't think it's 10 years away. But I think I've got my timing. I think I'm too early on it. And it's nice to be able to take a good chunk of your winner because I'm averaged in on this stock at about 185. It's been a pretty, it's nice when you're wrong, and I think I'm wrong on the timing, to be able to make money. So I'm not selling it all out continuously. I brought it back down to a normal size position. It was an oversized position. It was the largest position of my long-term portfolio. I brought it back down to a normal size position. I sold about 30 or 40% of the position. I didn't add it up because I've got across multiple accounts, and I didn't sell it out of any account. I just sold pieces out of each account. So I didn't sell any out of my kids' RESP account because their RESP accounts for 10 years down the road, and I'm like, they're holding it all. So they're all in. 20% of their RESP account is in Tesla. So it's like they're going for, you know, with my kids. But if you got a 10-year time horizon here, I don't think you worry about it. But I think we're going to get a shot back under 200 again. And I think we might even get a shot in the 180s again at some point in time. So I don't want to be full size, but I don't want to be out in case I miss it, because I do think long run, 5 to 10 years, I think Tesla is going to be one of the biggest AI companies in the world. But I think my timing is off. So that's where I'm at on Tesla. I lowered the position size to be like, make more sense with what I think the FSD timeline is.
All right, couple things. Fundamentally, I just don't know if the infrastructure is there for self-driving cars. I think
it's regulation more than anything.
Yeah,
it's
and
like
regulation too.
The infrastructure is fine. Like it just needs roads. I mean, it's its own thing. I think the word you're looking for is the regulatory environment is going to be very resistant to this. And especially, there's a reason. This is a big, important conversation. There's a reason that Musk is trying to, you know, get really in tight with Trump, because he knows if Republicans get this, the Republicans get the White House, they will be very resistant to anything full self-drive. So he knows the Dems are probably naturally more inclined to, like, I mean, California, you know, like they're probably more accepting to something like that. So he's kind of hedging his bets to a certain extent. I think he thinks if the Dems get in that, you know, well, they're, you know, energy, you know, EV, obviously, you know, talking, you know, global, you know, the whole I think the Dems would be naturally more accepting to possibly passing some regulation to get FSD going. Republicans be very much against it. So he's trying to work in with Trump that he could get some of this regulatory stuff approved. Obviously, there's the method to the madness here, folks. He doesn't just interview Trump on X just to get ratings. He's thinking twofold there. So I think your point being the regulatory environment's going to be very challenging too to get this approved. So, you know, one thing to have obviously full self-drive supervised, but have it unsupervised is going to be a while. So I think we potentially are a couple years away here from actually being able to, even if he gets the technology to where it needs to be, the regulatory environment becomes a hurdle then too. So I think it's awesome. I think it's so cool. And I think the long-term story here is phenomenal. I think the short-term story here is a lot of hiccups. And that's why I've lowered the position.
Okay. All right. Just technically speaking, really nice bounce. Nowhere like where the market is kind of sniffing where it was in July and August or early July. Tesla is not, but just let's keep some numbers on this. And right now, what's very important for Tesla is to get back to this 226, 227 area. Take back that move and hold on to that. Make that a support area instead of a resistance area. The longer it takes to get up and take back half of this move, the more I would be looking for another, continuation, because that was a big slide. What was that, 270 or 280? I mean, that was $100. Yeah, 271.
My long-term portfolio got absolute. I realized how big I was in Tesla when my long-term portfolio got rocked in July. The long-term, not the trading account. The trading account is independent of it. My long-term retirement account had a lot of Tesla, and I really got rocked in that 270 to the 180. And I'm like, I probably am too overweight this stock. And, the bounce back, the snap back makes the account look a lot better because basically half the loss is back. And you know how I think in my 50% retracements all the time. So the trader in me says, unload it all, Denny. The trader in me says, get the hell out. You're going to get this thing back at 180. But the long-term investor in me says, no, we're going to hold some Tesla because 5 to 10 years down the road, this company is going to change. Like this company is going to be a humanoid company. This company is going to be FSD. This company is going to do so many things. So trying to separate that, I've always struggled with. The trading hat, the investing hat is so hard to separate. I think my timing is going to be right. I do think I'm going to get this thing lower. The question is, chat, you're going to have to help me out. I need to rebuy those shares that I sold. So that's going to be my problem is if it goes back down, I'll be like, I'm kind of comfortable where I'm at now. No, I need to rebuy those shares that I sold. So chat, yell at me. This gets back to 160, 170, 180. Yell at me and tell me to rebuy my Tesla. I'm leaving it up to you guys.
You're also sticking with your guns here because when we were talking about the volatility over the last couple of weeks, you were saying if you're having trouble sleeping at night, then you're probably too big into something. Or yeah, and I'm not saying this is keeping you up at night, but yeah,
I mean, about it.
Yeah.
Like you're thinking about scenarios where you're wrong and you're thinking like, yeah, you know what? My timing could absolutely be wrong on this. We've even joked on this show multiple times about Elon Musk. He laughs at his own timing. He never gets the timing right. He's already kicked the robo-taxi from August to October. I don't think he can hit that event. I think he could maybe have the event, but I think it would be an epic disappointment because if he does have the event, he's going to talk about it in a year from now. And people will be like, you're not rolling this out next week, sell. I don't see how the event can be a success with where FSD currently is. And I'm reading statistics about the 96.3%, before you have a critical disengagement. Well, that needs to be like 99.9. I'm like, you got to get that other 3%. That's a ways to go. So when you sit there for 5 hours just doing research, I feel like I'm more, farther down, like not just getting caught up in the coolness of it all, which it's so cool. I mean, Mark Chaikin messaged me this weekend. He was in California and he took a Waymo and he said, I was way off on this because he was skeptical. And he said this to me. He said he was skeptical, but he's like, this was a really cool experience. The Waymo drive was a really cool experience. And I mean, maybe Waymo can figure out how to get out of those cities and not be geo-fenced. Maybe they come for competition. Maybe Google's a play. But, obviously we see the honk parade and, different issues. But, Waymo is, got it up, in their geo-fenced area. They've got it up that 99.9% without critical engagement. So that's where Tesla needs to get. But Tesla's trying to do it everywhere, which is going to be a challenge. And
must use FSD. You know what would really convince me if Musk got in a car in California and drove all the way across the country and never touched the steering wheel. That
That
would
can be done
convince me.
already. The freeway is good, Joel. So
Yeah,
that'll be done right now. Yeah, they've
really.
got it really well on the freeways. Like he's got it. Like if you look in the deep down statistics, like as I was reading even on that on freeways, if FSD was all freeway, he's already up to the 99.9. Freeway is simple. It's when you get into like
The
New
cities and
York
traffic.
City
Oh,
and you're going and people are
never,
walking out in front of you
never,
and you've got
never,
this and that, or you get up into Canada and you're on snowy roads. And now
never.
you all of a sudden are taking in like icy roads and trying to figure out how to navigate that. I mean, half the people around me can't drive on the icy roads.
You can't do
Like
anything on ice. Black ice. You don't
it's
even
really
see it.
tough. So what's the
Black.
car do? Does it just pull over? Does it like they say we don't operate this time of year? Maybe that's what it does.
Oh, that
There's
would
a
be
lot of considerations there. It's not all just, simple Simon like it is in San Francisco for Waymo. So, but, the experience, and, obviously I've had my buddy Rohit sent me multiple videos on the experience as well. It's awesomely cool to get into a car and the car just drives you to where you're going and there's nobody in the driver's seat and you're sitting there by yourself. You don't have to have small talk with somebody you don't know. You don't have to worry about them, listening to your conversation when you're having a business call, even though maybe, I don't know, maybe there's tapes and stuff in there. There's just so many. You think about the end result is so cool. You can get fascinated by it. And I've been fascinated by it on Tesla because I see that end result and I think how awesome that would be. To get there, though, they've got a long ways to go yet, at least talking to my friend Pete, at least, looking and researching. They've got a long ways to go. And I don't think they get there in the next year.
Yeah,
and
I will
Manuel's
say,
saying, DDD, just say you were wrong. I don't think I'm wrong. I'm up in the stock. I didn't get killed in it. I'm up 25% or something in some of these shares. I bought some at 169. I bought 185. I think everybody should, if you want to get out today, you honestly should be sending me a thank you card because everybody pretty much that's listened to this show is probably up in the stock unless you were buying up at 260 and 270 when we said don't chase it. So I don't know if I've been actually wrong. I don't know if I'm going to be wrong on it. I admit when I'm wrong. I have no problem being wrong.
You're wrong all the time. Yeah.
All the time. I'm wrong. Dude, if you looked at my long-term winning percentage, it's probably shooting like 55, 60%. And that's pretty damn good for a trader. I've never analyzed it, but I guarantee you I'm not shooting 90, 80, 70. A good trader
on Twitter,
might be like 51, like 52. You don't have to be right all the time. And everybody's going to say, oh, I'm not those losers because they're long only and they don't sell when they're down. That's a different story. How many of those trades have you been down in? And you know what? Sometimes you get down in those stocks and then they take over. Those losers take over your portfolio. So it's okay to be wrong. And maybe I was wrong. And maybe I am going to be wrong on Tesla. I don't think it's been proven either way that I'm wrong. I think I'm just lightening up my bet before I end up being wrong. I think there's a possibility I could be wrong. So I don't think it's been determined yet whether I'm wrong or not. I think it's just lightening up my bet.
Well, so far, you're not wrong. If your average price is what 8119, yeah. I mean, I don't know. I mean, that's just our chat, Dennis. I mean, they
love it when I'm wrong.
They thrive. They thrive.
Love it when I'm wrong.
They can't wait. Oh, like people probably didn't even sleep the whole weekend. They're like, oh, I just can't wait to rail Dennis about selling some of his
you're an idiot, Dennis. You see the light. But I listen to multiple viewpoints. I mean, this is what trading is all about. Don't get stuck on your viewpoint and be open to listening. And I very much value my friend Pete's opinion. This guy is one of the smartest people I've ever met in my life. And if he says we're well over a year out, I'm like, okay, I may be too early to be loaded right up and overweight in Tesla. Let's bring it back down to a normal weighting and let's reanalyze. So the first thing I do is bring it down to a normal weighting. And what a gift. The stock's up 18% in like 9 days, back up to 215, 218, 217, 219. I mean, it's a nice time to lighten up.
All right, well, we've got a couple more minutes before we bring our guest on. Let's take this time to do a couple earnings previews here. So, Dennis, I know you got the list in front of you. What are some of the biggest stocks we have?
Do we want to do AMD first? Because that's moving pretty good.
Let's
go current. Let's do AMD.
Let's do AMD. So, AMD is trading higher this morning, 2.5% after the company announced it is acquiring ZT Systems, which is a cloud data a server company. So $4.9 billion for ZT Systems. This is to boost data center AI systems capabilities. So we've seen the growth from NVIDIA and their data center growth, the stocks like VRT and all this stuff. So AMD is trying to get a little bit more in this space. Again, spending $5 billion to acquire this company. A lot of times when you see a company acquiring a different company, now sometimes there are stocks involved. It's not an all cash deal. You'll see that stock trading down. So it is interesting to see AMD actually trading higher on this news that it is acquiring this company. So AMD up about 2.5% on this acquisition.
Nice pop. I'll just give the quick technicals, and Dennis can give the fundamentals. You have AMD does give you shots at the pre-market levels a lot, and the pre-market highs right here at 154. I see two other daily highs in that area. So if you're just looking for AMD to run, boom, you need a solid 154 bid, and then things kind of open up. The longer it takes to get back up there, take out the 154, you might get a little bit of a back and fill. Potential support is way down at the top of yesterday's range, 149.37. But so far, they're liking the acquisition.
What a comeback for this stock, too, from those lows 9 days ago. I keep going 1, 2, 3, 4, 5. It's 10 days ago now.
Yeah,
but
2 weeks ago today.
What a comeback. 121 that Monday morning is now 152. So again, if you were puking and throwing up and not being able to like even stand looking at your account last 2 weeks ago, Monday, what a gift this is to, this rally, this insane, and it is insane rally that we've had where we've just said the carry trade is over and we go back to what we were doing, buying tech stocks, hand over fist, and it's going to change the world. As much as my timing, and I'm not going to go into Tesla right here, but I'm going to use it as an example. As much as my timing might be early on Tesla, the market is somewhat early on all the AI stuff too. I mean, we've had this huge bring in, but the end applications are very much in their early innings, and there's going to be cool stuff that's going to come out. But what game-changing AI thing is coming out tomorrow? That's the driver to continue driving the bus for everybody. And maybe we don't know. Maybe it's going to be something completely different. And I do think you've got the long-term 5, 10-year time horizon. You're invested in AI and you're investing in tech stocks. But just short-term, we're so overbought. We got hammered. And now we've had what is called the snapback rally, where the second round of believers come in. But we haven't got back to the highs, like NVIDIA going from 91 to 125. I mean, Joel, it's up 35% in 10 days. You can't be buying it up here. I'm sorry. I mean, I'm long NVIDIA, but if you're coming and starting a position in NVIDIA at 124, and I said it last week when it was 119, I said, you're doing it backwards. Well, you know what? You got another $5. So maybe I was doing it backwards. It's continuing. I was wrong 2 days ago. It continued going, look, I'm wrong. But what I think is you're fully chasing here. And the odds are not with you. This is just going 140, 180, 200. I feel like there's another like wash, like a whoosh, where you shake people out of this. And maybe it's not. Maybe it's just going to continue to go up forever here. The valuation's not crazy on NVIDIA, 33, 34 times earnings. Maybe it's up to 36, 37 with the recent run. And I still have some in the long-term portfolio. But man, we just, this stock is just so overbought again now. As much as it was oversold 2 weeks ago, now it's went to overbought. I can't chase it here.
Yeah, I mean, NVIDIA here, like if you look at the valuation though, compared to the other Mag 7 stocks with the projections of the earnings for NVIDIA, it's actually not. I mean, it says the PE is 47. I have a feeling that after the earnings report that comes next Wednesday, that'll come down a little bit. It'll be interesting. I think that'll be a big test for NVIDIA, obviously, on the earnings report next week. I'm going to wait to buy some more on a pullback here, Dennis, but I still think there's a chance. I know you said that the top is in for the year, or that you think there's a chance the top's in for the year. I still think I might take another stab here at NVIDIA because I missed it at $90 last Monday, but we shall see. But
I don't think you're getting 91.
No,
I think it's gone. I think the ship has sailed unless something fundamentally changes. Do I think you're going to get a shot at 110? Yeah, I do. I think you're going to get, like, I think about the 50% retracement of the 50% retracement. Like, think about 15, 30 up, if you want Nvidia, I'd have my orders out at like 110, 111.
I knew you were gonna say
I don't
that.
think you're gonna
Yeah.
a 125. It may just go, and maybe you're wrong. Maybe along, like, nobody knows. If we had a crystal ball again, we would have all the money in the world. It'd be like, going back to the future style, where we went back and we picked up that sports book, we bet on all the winners only. But we don't have that. So all we can do is say, man, this has been a big move. It's nice to take profits after a big move, and I've never made a lot of money chasing big moves. And 35% in 10 days is the definition of a very big move.
All right, let's go ahead and bring our guest on for the day. We've got an exciting guest today, Michael Katz, the CEO of Trade the Pool. Without further ado, let's go ahead and bring Michael on, making his pre-market prep debut. All right, Michael Katz, welcome to
What's up?
Prep.
How's it going, everybody? This is afternoon for me, but yeah, good morning, everybody. How's it going?
Good.
Afternoon. Where are you?
On the other side of the world.
The other side of the world.
Yeah.
So you're so you're middle of the afternoon. So you've already been up and trading for hours then.
No, I mean, we're waiting for the market to, just open in bail like everybody else. But yeah, some of our traders already been doing great on pre-market, trading those penny stocks.
So, Michael, before we get into some specifics, what is Trade the Pool? Do you mind just giving us a brief overview of the company, what it is that you guys do?
Sure thing. So basically, we're an online prop firm. We fund stock traders, the only company in the world that does that specifically for stocks, not CFDs, real shares. We have basically 12,000 symbols. You go through an evaluation phase or a challenge, and you pass the test. We give you funds and we split the profits. The thing about it, because especially in the US, when you have the PDT rule, in our case, you can avoid that by joining Trade a Pool, because we are trading on a one big pool and you take in a chunk of our pool. So we're basically passing that PDT or bypassing that PDT. And there are challenges, 4 tiers. You just go through that. You need to stick within risk parameters and specific risk rules that we set. If you succeed and pass that, we split the profit on the funded account, as we call it.
And so who is this for? I mean, because I imagine that this isn't for someone who just started trading last week or someone who's pretty inexperienced. Like, what level of trader are most of your guys that are funded?
Yeah, so there are local shops in the States that you need to show profitability of 3 to 5 years, and only then you get funded and you get a desk. But actually, when we opened Trade a Pool, we decided to shift the game and give it to the retail traders. So technically, anyone with a week of experience can try that test. And we had, just a minute ago, we had a lady, Morgan, that passed the evaluation, got funded already, withdrew some funds, and she's only been doing it for 6 months. So as long as you have that ability to stay within the risk parameters and you do have an idea at least of what you need to do in the market, you should give it a shot at least once. The lower entry is $97. So, I mean, it's for everybody.
Got it. And then outside of avoiding, PDT rules here in the US, what are the benefits to joining Trade the Pool and becoming a funded trader?
All right, so I'll give you a little bit background maybe about myself, and this is how we got to that point. I've been trading for 17 years, mostly stocks and futures. And after a while, when I traded all by myself, like anyone else here in the show, I got to a point where I joined the prop firm, a local prop firm here. I was the head of the traders there, and then I got to the understanding of, the guys that really making money in the market are the guys that not trading their own capital in most cases. So you have all the banks, all the hedge funds, they're all trading someone else's money. Maybe on the side, they're also trading their own account, but they have the vast majority of their capital basically brought by someone else. once you take that equation of risking your own capital, you're automatically making a better decision when it comes to trading, because it's not your own money. Besides that, you have enough capital to trade with. So I remember when I opened my first account, it was $10,000. I couldn't do 2 trades simultaneously, or I couldn't buy, instead of buying 500 shares, I could only afford to buy 100 shares. So those kind of elements, when you're trading a very low capital, will affect your trading and at the end your results. So in that case, when you're trading someone else's money and you have enough capital, and we also have risk parameters to control your risk and not letting you blow your account super easily, as you most likely to do on your retail account, those elements are brought to you in Trader Pool, and you can actually use them in order to leverage and potentially succeed much higher. At least your rate to success is much higher than when you're trading all by yourself with your own capital. We see
I
that.
want to expand on this conversation here, because it's an important conversation Michael's having. First, if you don't know the PDT rule, that's the pattern day trader rule. So I just want to get some context behind it, because maybe some new listeners don't understand that rule. If your account, I believe it's under 25,000, am I right, Michael? If it's under 25,000, you can only execute 4 trades in any 5 business day period, meaning like, you're very limited. You make 2, 3, 4 trades, and then you're out of trades for the week. These are regulatory rules that were brought in after the financial crisis, because they didn't want people just coming in and like day trading their accounts away. So obviously, if you got a $10,000 account, you're limited with the number of trades you can do, which is very disappointing, because some people might trade small size and still be smart about it, but they still can't trade, So it'd be better if they would have used like a capital constraint or something, but we're not regulatory. We can just find. So Trade the Pool offers you a solution for that, which, is good, that you can come in. And the other thing, which I've always said all the time, is it's very difficult for somebody to make a living with a $10,000 account. You're not all going to be options geniuses. I mean, you think about a good living. What's a good living to an average person? In this day and age, it's probably $40, $50, $100,000. To take $10,000 and say, I'm going to make $100,000 off that $10,000 every year, you make 1,000% on your money every single year. You better be an options wizard. Very difficult to do. So what Trade the Pool offers you there is also a solution as well for the problem of being undercapitalized. So it allows you to obviously trade more than 3 or 4 times a week, and then obviously offers you that solution where I don't have to make 1,000% on my money to pay my bills. So then this is what Prop does for you. So Trade the Pool, obviously being a proprietary company, is one of those solutions. So I was just giving background to the listeners. I know, AB, you had another question as well.
No, I had a question for Michael. Michael, seeing traders come in and come and go. What are the 3 things of advice that you give to new traders, people that are coming in, even before they get an approved account? What would be 3 things that I mean, things are always changing. There's different market conditions, but seeing a lot of people come and go. What 3 things, words of advice, would you give the traders?
Yeah, I mean, that's a great one. First of all, obviously the risk side. I see a lot of traders coming in and, just swing for the fence and trying to make it on one big trade. But actually, those that pass the evaluation and succeed also in the funded phase are those that start in the position with a small chunk, just a filler. So you start the position, you test the water, you understand if it's going to your direction, and then you add more to your position. Something that a lot of the traders don't do, even though they maybe learn it on other courses, and we of course talk about it many times on our education. You gotta start by testing the water. If you're risking $100 per trade, don't risk it all in one click. Start with $20 risk. Add a little bit more, another 20, another 20, another 20. Build your position. That way you will have much more higher success rate, no doubt about it, and you will know that this is the right trade that you want to take, and once the stock goes to your favor. So this is by far the most important one that I see repeat itself over and over again. And of course, the other stuff are straightforward. Over trading, a lot of the guys just go and click the mouse key, just want to grab that trade, but you actually need to take a step back, focus on the setups, the A+ setup, A setup, wait for that moment when you actually need to click the mouse key and not just because the stock is running. I'm looking at some of the charts that are here, VRAX, right? VRAX just popping from $2 to $6. Some of our traders are in right now and also took some profits already. But if you look at it, in most cases when it's running, also Nvidia, Tesla, anyone, any stock that is just running, in most cases you want to jump in and not miss the train, right? But on those cases, in most cases, you will lose because you need to wait for that pullback. You need to wait for a consolidation before you jump in and so on. Like you said, also, Dennis, about Tesla or Nvidia jumping in at 125, right? So you need to wait a little bit. This is also something that I see a lot of the times going on when traders does that. And so it's kind of straightforward, trading in general, the same concept, the same tips that you'll give a new trader will apply here as well. Just
Michael, what about new people coming in? Like, people are prone, and I ran prop shops, trained a lot of traders over the years. So many come in with a long only bias, right? And the market over the course of time, buying the dip, trading has been, it's been a great experience. But one thing that I try to emphasize, with traders is that, you have to look at both sides of the market. I think that's really like some people just won't short. How do you get, because I really think that you have to have that if you want to be a sustained long-term trader, you have to be able to look at both sides of the market. How do you get that across to new people? They, markets go up and they go down, and yet, historically we've gone up more and we've gone down, but how do you emphasize that?
So that's a funny one, because in our case, most of our traders are actually short sellers. So, they just love to short.
That's evil, though, Michael. Short selling is evil.
Get this guy out of here.
Evil. The evil short seller. The media has that evil short seller.
Exactly. But it's fun because you see the stock dropping very nicely in most cases, so that's good. But there are short sellers by nature or bias on that in most cases, especially penny stocks that we also allow the guys to trade with also hard to borrow stocks as well. This is why I'm looking at the charts now and I'm seeing all those penny stocks that popping up. They're all waiting for that pump and dump, especially the young guys. But I'm also trying to shift them to first trade also on the long side on those penny stocks. And because we have enough buying power, the first tier that we offer is $20,000. The top tier is $260,000. So in that case, I offer them to try to shift it to large cap, right? You can easily trade, even with $20,000, you can easily trade Nvidia, Tesla, maybe the ETFs like TSLL and those. So definitely, I'm trying to teach them to go to the long side, but it's easier on the short side, I guess.
What about the end of the day? Flat, dumb, and happy?
Yeah.
Are you allowed to do overnights at Trade the Pool?
Yeah, we have two programs. One is for day traders, the other for swing traders.
Okay.
But most of them definitely focus on the day traders.
Okay.
Yeah.
So most of your traders would be probably getting flat at the end of the night.
Yeah, or maybe we'll get flat and then open a tiny position overnight, like after market.
Okay, so you can trade aftermarket too. You can still do all that.
You can. We literally on that aspect we have zero rules. You have plenty to do. Pre-market, aftermarket, 12,000 symbols, ETF, stocks, everything on that. As long as you stay within the risk parameters that we set before that.
Are there any regulatory hurdles here for people to join? Do they have to get licensed? Do they need is there anything they need?
Not at all, because the evaluation phase is on a simulator account. Once they get funded, they are trading our capital. So we basically have a contract of just a normal freelance contract, basically.
Okay.
Got it. Well, Michael, this has been an awesome conversation to learn more about Trade the Pool.
sure.
I know here in the future we might have some more exciting announcements. So, guys, make sure to stay tuned. We're doing some exciting things here with Trade the Pool. Michael, again, it was great to learn more about
Thanks a
how
lot.
some of our viewers can go this route and become a funded trader. Thanks again for hopping on, and hope you enjoyed the rest of your day.
No doubt. Good luck, guys. Bye.
Thanks, Michael.
All right, guys, that was Michael Katz, the CEO of Trade the Pool. Again, we've got the link in the description, or you can hit that QR code on the screen if you want to go learn more about how you can try out the services. I know we already have some viewers in the chat that are doing it, so let us know what you guys are thinking about it. All right, Dennis.
Real quick, I just want to say Estee Lauder has now gone green on the session.
Wow.
So when Dennis was taught,
yeah.
Go ahead, Dennis.
No, I was going to say it's just not the time to beat up on the laggards. This is laggard. Like last week has been laggard week. And I don't know if anybody's paying attention to it, but you've got stocks that are popping back. And you can thank Starbucks probably, really kickstarted this with obviously stealing the CEO. I don't know if he stole him from CMG, but I mean, this has been the laggard week. And then obviously activists coming in, even to the point where, Nike obviously with Ackman having the big pop and people speculating now that Lululemon, Me Too, might be the next one ripe for activism here. Intel popping back a little bit here too. Laggards are just showing life. And it's very important. Like for me as a trader, my biggest asset is to be able to group stocks and move them as times and as stories are changing, be able to like group them differently. Because who the hell groups Intel with Lululemon? Nobody. There's no algorithmic program doing that. Those stocks have absolutely nothing to do with each other. But they do when laggards start to perk up. And you know how you beat the algos? You stay one step ahead of them all the time. And regrouping is something that I do, and I don't talk about enough on the show. But I regroup. Obviously with COVID stocks was a simplistic, example of it, where COVID stocks and stay at home and go and reopening stocks and all that. I mean, and then that, changes. And then you don't have to worry about those groupings as stories change. And then you got the AI story that's really driving the bus. And what's AI? But you can think technology stock is a technology stock. A laggard trade goes across all industries. A laggard trade goes across all stocks.
Everything.
A laggard trade can apply to everything. So if you feel the laggard trade is picking up steam, and it absolutely is right now, you would not be shorting Estee Lauder in the hole. And if you were this morning, you're not paying attention to the EL and you're not listening to pre-market prep, because what was the stock, 91 or 92 when we talked about this 5 minutes ago or 20 minutes ago? Now it's 97. So I mean, don't be just like there's actually a possibility right now that maybe you should be buying those earnings dips on these laggards when they get to 10% algo dump, because the algos are stupid. They haven't even figured that part out yet. They're just like, oh, it missed, it guides down, it automatically goes down. The algo's getting killed right now, and the person's running it. It's like, why are we getting killed on this? This doesn't make any sense. The stock missed and guided down because you're not paying attention to the laggard trade. Pay attention to everything, keep and stay one step ahead of the algos, and you'll be successful in this game.
All right, real quick, we've got about 7 minutes of this.
Mark, before we change, what defines a laggard? It's a fantastic question.
I just saw that one. I was going to
look at the chart. Take your
90
90-day chart and see if the stock has just been. Take your 1 year chart, not even 90-day. Go out to 1 year. Look at your 52-week lows and look at every stock that's been absolutely killed in the last year or two. Those are all laggards. So if you have one of those companies reporting, and we have a lot of companies reporting this week, I'm just looking, for instance, Snowflake. Snowflake would absolutely be defined as a laggard here right now. Snowflake reports on Wednesday night. If Snowflake gets beat up and the laggard trade is still hot, we'll have to obviously analyze. Nike and Lululemon, all of them start rolling over, it might be the end of the laggard trade. But right now the laggard trade is hot. I would be so inclined to maybe go bottom fishing, not before the report, but if the algos hit it on a bad report, there may be that possibility. So Snowflake would be a laggard trade. Zoom, which reports Wednesday, that's a laggard.
Zoom.
That's been a dumpster fire for basically everybody in there. Well, that's another one that's attractive if it gets hit on the earnings, because you know what? These are just, exhausted. It's seller exhaustion is really what starts the laggard trade. And then it gets like, people interested when they start going up. They're like, oh, well, maybe there's value here, or maybe there's, a turnaround story. Lots of different reasons, but the simplistic answer is just look at your chart and go out a year and see what's been killed.
And what's the dog of dogs of dogs? It's not a U.S. stock. I gave you a
Baba.
big, yeah.
Exactly. Look at what Baba did on its earnings. It got hit and dipped and ripped.
Yep.
Why? Not because they said anything. Oh, the media will say, well, they said something on the conference call. You know how many times Baba's had good stuff said on the conference call and it hasn't gone up at all? The reason Baba's showing life is because the laggard trade is coming on. FXI is coming on a little bit here right now. Even my Baidu is perking up. I'm averaging 98. I averaged down. I forgot. I'm averaging around $98 on Baidu here, but it's been an absolute disaster. But Baba, I'm averaging 81. I'm up in Baba. I was like, holy cow, I'm green in Baba. I don't think I've ever been green in Baba before in the long-term account. Well, obviously I did, but in the last, like I've had it for a couple months, and I was like, I bought it, and I was immediately red, and it just kept going down on me. So
the pre-market low on the 15th was 75.46. 75.46 for Baba on that day, and then
good pop.
And then that was the 15th, and then the low on that session, the regular low on the 15th was way above that, 77.74. So that just wanted to point that out in the Baba trade.
All right, real quick. I mean, I did want to mention, just talking about what's going on with this Mpox stuff, because we've seen a couple stocks perk up on this. Of course, the main one right now is GeoVax. Ticker GOVX is trading up 50% pre-market this morning, up more than 270% the last 5 trading days. This comes as Mpox cases are now spreading in countries outside of Africa. So before you see any, sensationalized headlines trying to compare this to COVID or whatever, first of all, this is not COVID. Mpox is not, you're not seeing the rate of transmission. It's
not airborne, is it?
No, so it actually is spread mostly through physical contact. And so, there's certain subsects of people that are more subjected to contracting Mpox based on their physical contact with other people. But you're seeing more than 16,000 new cases, 511 deaths so far have been reported this year. 9 new African countries have reported confirmed cases of Mpox in recent weeks. You saw a couple cases in Florida pop up. You saw a case in the Philippines over the weekend where the person who contracted it never traveled internationally. So it's like starting to kind of get some of that international travel. But again, like if you guys think back outside of COVID, the big scares that we've had, Zika, Ebola, you name it, most don't start materializing into a global epidemic like we got with COVID. COVID was kind of the 1 in 100 or 1 in, 1,000 of these diseases that actually ends up spreading to that extent. But it is worth watching this story to see how cases are developing, because some of these stocks like GeoVax could continue to move higher depending on the news cycle and what's going on with these cases. So something to watch out for this week. My hunch is that, a couple weeks from now, we won't be talking about Mpox anymore, but certainly something to have on our radar.
And that's one thing to consider, is these stocks are often like hot potatoes and they go up, but when the music stops, you don't want to be stuck holding the bag. So just keep that in mind. These stocks would never be something like a long-term portfolio thing for me. I don't think Monkeypox is going to take over like COVID took over. I don't think this is a long-term, but you never know. But in the short term, these things can get really hot and they can do a lot of things too. I think, a stock like GOVX moved up a lot in the last few weeks. I mean, profit taking is always good, but we've seen these stories really explode. And, this is a stock that what's the all-time high on GOVX, Joel?
Oh, this is the ugliest chart. It's so
like
ugly.
$5,000 or something.
20,000.
$20,000.
Well, the high is 20,000 and the low is 20,000. So no, negative 20,000.
I don't know if that's right. Is that right?
That's what Trade Station's giving me, man. They
I
probably
don't know.
have done
And
so
I got
many
$120 at 20. Did it have
Yeah.
a reorg? Maybe it had some reorg or something.
I don't
in
know
there.
what they did.
Anyways, regardless, this stock has really been a dumpster fire, but laggard trades on too, but this has nothing to do with laggard. It's all about story.
Yeah, no, this
and
is
if the
doesn't follow
Monkeypox
that
thing
category.
continues to, pick up steam, the story, a stock like this could continue to move higher. I'm definitely not shorting something like this.
All right. Well, that brings us right to 9 a.m. We didn't get a chance to get into some of the earnings previews, but we'll do that tomorrow morning. Just real quick for the week here, we do have initial jobless claims not till Thursday. So kind of light week in terms of economic data. Tomorrow, of course, is a Tuesday, so it'll be a T3 Tuesday. We'll be bringing on,
Nice.
I don't know if we know exactly who the guest is from T3 tomorrow, but they're always sending someone good. So
They're all good over at T3.
Yep. All right, guys. Well, thank you to everyone who tuned in to Pre-Market Prep this morning. Thank you to Michael Katz and Trade the Pool for joining us, our special guest of the day. Hope everyone has a great day and stay
Palo Alto
green.
tonight. That's the only one
Yeah,
we didn't
that's what I was
mention.
going to mention.
PANW is the big headliner tonight. I did dump my PANW. I actually had it for a trade on too ahead of it. I've dumped that as well, so I'm all out of PANW now.
Keep an eye on this 345 area. Several highs in that area, and then that's the path to fill in the gap of 359.82. So there's a quick technical look at Palo Alto Networks.
There you guys go. All right. We'll see you tomorrow morning, 8 a.m. Please smash the like and subscribe to the channel if you have not already. We do have live trading starting up right after this, so do not go anywhere. And again, we will see you guys tomorrow morning.